All right, we are live. I am actually the reason we're late today. I overslept, but I appreciate everybody still being here. I got to post this out. Roy, why don't you do introductions?
Yeah. So thank you guys for tuning in. It is a little bit earlier than normal. We wanted to do this, try it on Monday anyway, shifting schedules. Sometimes that happens. Bootleg is bootleg. So we don't take it too seriously. As always, put your questions in the chat. We'll try to get to those at the end, and we'll highlight them along the way. Tonight, we're going to for sure be talking about Tesla, why it's down year to date. There's a number of factors, and maybe Tevis will have a different opinion than me on whether he's adding here or waiting. Hymns, we're going to talk about that Super Bowl commercial, ad rankings as well. It's flying up off the charts. We're going to talk even maybe a little bit of GameStop. I know that's something that Tevis doesn't like to talk about, but it popped up about 10% today. And there's a reason that Tevis might actually really like. So we'll see. And I'd also like to talk about my newest position, Nvidia, why I'm buying and why Tevis hates making money.
Great. Yeah, that's a great agenda for today. I definitely do hate making money, it seems.
Yeah, I mean, you got to pay taxes when you make money. So, I mean, who wants that?
That's correct. Yeah. Let me turn this on. And what do we want to start with?
Well, your choice, Hims or Tesla?
We can start with Tesla.
Okay, let's do GameStop then. Let me show you this here. So GameStop is up a little over 10%, and GameStop is this position that I talked to you about. That it's in my swing portfolio. Long term, I don't want it. No debt, lots and lots of cash, because selling shares, diluting shareholders. But anytime that there's a Roaring Kitty thing, or anytime Ryan Cohen does something, then all of a sudden people get excited. And this popped up in the weekend. You recognize these people?
Yeah, I saw this picture over the weekend.
And it's Sailor. We can pull it up. Oh, it doesn't want to follow me. Well, anyway, like no comment. It's just a picture. That's it. And then the headlines, from Sherwood Media, there is GameStop pops, is trader hope Ryan Cohen is borrowing Sailor strategy. Of course, GameStop authorized Ryan Cohen to basically trade and use the money asset. So it works kind of like a mini ETF, more like a treasury bond in some ways too. So I think as far as legalities, like he's good to go to buy Bitcoin if he wants to adopt Ryan Cohen's strategy. GameStop, of course, is no stranger to diluting shareholders. So that could happen again. If they're adopt not the Ryan Cohen strategy, the Michael Saylor strategy, what do you think, Tevis? Does this change your mind on GameStop at all?
Not really, no.
Do you think that they should or should not do this, or
as in buy Bitcoin?
Yeah.
I mean, I own a lot of Bitcoin, so I'm pro Bitcoin. I'm not against them buying it. I just don't understand what the thought process is there, right? Like, it's just artificially inflating your stock.
And as a temporary shareholder, I approve. Yeah, long term, I think the problem is GameStop doesn't really have a model. I mean, they exist, but they don't have a model for the future. And I think, from a lot of Ryan Cohen's actions, it seems like they're trying to find another business to branch out in or accelerate things, and they just don't have that. And so, if they do this, long term, I don't think that's bad for GameStop. I don't think it's good, but it probably will pump the stock. So, and that is true. Tanner did make you late, so he sabotaged your camera. We know it.
Yeah, it's all his fault, man.
And does it seem that I'm really dark today? Is it less bright?
You seem fine to me.
Okay, could just be my camera.
Have you been at the beach recently? Like,
nah. Anyway, yeah, I just kind of want to get your thoughts on it. I'm only swinging this, so hey, it pumps up 10%. I sold covered calls. If they go away, they go away. That's fantastic. That's why I hold it. It's not a long-term thing. It's not a company I want to be in long-term. But yeah. All right. So you said Tesla or Hims next?
Dude, I took a nap and I set my alarm for 7:30, and it was like 6:40 when I started napping. And I was like, all right, 50-minute nap, great, just a little reset. I snoozed my alarm, and then I like panic woke up at like 7:55, and this is what you're getting. And so now I'm having a little Celsius to wake up. You're gonna have to carry a lot of this beginning part of the stream, Roy.
All right. Well, throw up Elijah's comment there that he'd buy. Yeah. So I got news for you, Elijah.
You own Brock.
He's going to be a happy shareholder of GameStop then, because I own a little bit on $100 now because it underperforms of Block. And I don't know if I've shared this here. Have I shared my hedge publicly?
I think you did publicly share.
Yeah. Well, Elijah, I own puts on Block as well, and it's a lot more than $100. It's a hedge, not designed to make money. So if you're like, hey, he's got way more in puts than actual shares, that's fine. But you should buy at least $100 worth of GameStop because, hey, you said that. So fair is fair. But no, like my hedging strategy, it's just basically I see some potential increased regulation and scrutiny on buy now, pay later. Did not want to go against Max Levchin. The firm actually reported this week, and they just blew it out of the freaking water. It's like, you don't bet against quality leadership. And that's the other reason why I'm betting against Block. They do not have a Max Levchin at the top. They're so just a tier or 5 down from Max Levchin. I mean, frankly, Tevis, if you were in charge of Block, I would probably go long term. But like Dorsey, no. Not in the company.
So freaking aggressive today. Roy came out to fight, man. You don't bet against quality leadership, folks. When I see it, I won't bet against it.
Yeah, exactly.
Short Block.
I like Block. I like their products. Jack Dorsey's a fine person. I'm sure, great startup guy, but yeah, not next Palantir. Or if you're asking, what the next Palantir is, probably Palantir. It just keeps running. New all-time highs again for Palantir. All of my covered calls are now underwater. Not just some, not just most, every single one of them. And it's like, could we, this is a nice problem to have, but could we stop going up 40% every week? Stop it. Related to that, you and I have a position that we may or may not have some covered calls also underwater.
Yeah.
Hims. So Hims continues pretty much every week hitting new all-time highs, not just 52-week highs. We entered going into this week, and Tevis and I were communicating. I don't know if we did publicly. I'm like, hey, I think this is probably a sell the news event. And I sold covered calls, kind of expecting that. We're way up anyway. And I don't mind letting some of those go, not all of them. Ultimately, was it a sell the news event, Tevis, the Super Bowl ad?
Yeah. I let about half of my Hims shares go on uncovered calls that I just let get called away because I had rolled them twice. So yeah, I woke up this morning and it was like up another 5%. I was like, I'm in stock. But it's fine because I have the other half of my shares and then also all my leaps on him, which is ridiculous because they're 2027 leaps. But I very much welcome a dip in Hims if ever we get one.
Yes, we will. It's Hims. It's the most volatile stock, probably that you own too, right?
Yeah, it's definitely volatile.
Even more than Joby, but like 50 times as well. Oh, that's right. Yeah.
Well, so the thing with Hims is like it's really interesting because if you look at the chart, it looks to me like this accumulation pattern is going on because every single morning you have this big candle. Let me see if I can.
It is kind of wild. It's like the same price action every single day for Hims. Every day.
Yeah, like, okay, hold on. Let me throw this up on screen and then let me get the right screen so I'm not streaming How I Met Your Mother here. All right, Weeble. All right, So if I go on like the daily, sorry, not the daily, I'll go like 1 hour, and
Open, pump, open, pump,
right.
open, pump.
Okay, so look, let's go back. Let's go back a couple of weeks. Like, there's so much volatility that happens like at the very start of the day. So start of the day, it either pumps or dumps, right? Okay, here, and then here, and then here, here. Massive candlesticks, and it just like chills, right? Volatility, then it chills, and then here. Look at this. Biggest candlesticks is the first one, right? The first hour. Pump, 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 pump. You see this?
Oh yeah.
It's always at the beginning of the day. And so I'm like, oh man, like there's some whale probably loading up here because you're seeing the exact same pattern every single day here, where as soon as the market opens, you get this massive candle. And then some days you get a dump right after, but
Yeah.
usually
And
it's
it's,
up.
when we open, like that's when the most volume is anyway. So it should be expected to see more volatility, especially in a volatile name. But seeing that every single day like that, it's like it's don't call it manipulation. But I think you're right, Tevis. I think there's a few parties, probably large funds or large investors. This is a small float stock, right? That just is like, I'm gonna buy that freaking up. So Matt, you're welcome to come on us. Come on aboard. We're going to talk about Tesla in a little bit. We're going to talk a little bit more about HIMS first, and also Nvidia, and possibly some EU AI plan news as well. So, Tevis, you want to send out an invite to him, and I'm going to share.
Mm-hmm.
So, a couple of things on HIMS. One is let's actually look at. Let me share my whole screen here. We'll just do it that way.
Yeah, you're welcome to join us, Matt. I think is what Roy meant.
Oh man, nobody clipped that.
I'm like, trying to keep it so serious and ignore it because like you're a very serious, stoic type of person.
Yeah, no, I realized as soon as I said that, I'm like, yeah. So last night, I slept the longest that I slept in like years. I slept 12 hours straight. I guess I'm fighting a cold or something because my head's like a little bit fuzzy and I'm not like 100% today. So by the time we get to the end of the stream, you'll be fully awake and I'll be like ready to zone out again, I guess. But no, I'm happy to come on here. Yeah, let's look at this one first. So Super Bowl ad. Of course, it did its work. They had a minute spotlight, and we expected that probably the traction of HIMS and HERS, two separate apps, by the way, if they combined them, they'd probably be number one in medical as far as top free apps. But this is not normally where HIMS and HERS is. Normally, it's just outside the top 10. So this is really good to see. Website traffic is probably up a lot. We can check on that tomorrow. I don't have a paid service, so I can't check on what that looks like today. But yeah, what do you think, Tevis? Is this a surprise to you? Is this as expected? Is this why the stock's running instead of fading?
Yeah, so let's talk about this. And I think really with regards to HIMS, it depends on what camp you fall into, because I think what nobody can deny is the scale and the magnitude of that ad. Whether they're going to critique it for not having disclaimers, which I agree with, kind of, that they should have done their best to avoid a lawsuit because big pharma is sort of out to get you. But whatever, we can get into that critique. Whether it's all of this press coming out and CNBC was out like critiquing HIMS, I posted about that today. Or whether it's the positive feedback. It's people who on Instagram, the overwhelming feedback was positive. And then you see the Google Trends saw a massive spike. And then you saw the app ratings, both of the apps break into the top 5. It's estimated about 123 million people watched the Super Bowl, and there was like closer to 200 were watching at one point in time throughout that like 3-hour block. So, I mean, you're probably going to have 100 million people who saw that ad ish. A lot of people critiqued it for being like a bait and switch because they thought it was like a Make America Healthy Again app. advertisement, and then you have Hims, who's basically advocating for just use our products instead. But I think the wider through line to take away as just the first order effect is all of this chatter and this debate and this argument back and forth. All of that is publicity for Hims. It's press for Hims.
Oh yeah, that's one of the things. I don't remember who said it originally, but basically that no press is bad press.
Yeah, all press is good press.
All press is good press. Yeah, and we're seeing second order effects now too. And so you mentioned a little bit of criticism towards the style of advertising, and of course Hims itself. And so let's throw this up. I thought this would be a good point. Let somebody actually tagged me and is like, hey, Hims is gonna crash and do terrible things, and this is a terrible platform, and obviously they're lying and misleading.
You get demonetized for this? Yeah, probably. It's okay.
Do you think we're gonna get demonetized?
But
I can mute it.
It doesn't matter. You can just play it. It's not like we're making millions off the stream anyways.
Yeah. This Hims and Hers ad during the Super Bowl is so insidious.
And I love, by the way, when people call companies that I'm invested in insidious. Ross Gerber, you know who he is, right? The Tesla guy. He made very similar comments about Palantir when I was trading like at $9, $10, $11. It's like it's the most evil company in the world, and just all these crazy things that even people that were kind of skeptical of Palantir are like, are we talking about the same company? So this is kind of funny.
And also quite possibly illegal. Because at first I was like, hell yeah, who's this talking about obesity and how it's America's #1 health crisis, which is 100% true. They call out how the system is meant to keep us sick. They point out that the food industry is selling us poison for profit. They even threw in visuals of Fruit Loops, so I know they're for sure paying attention to Maha and the movement to boycott Kellogg's. But guess what their solution is? It's just more drugs, injectables, pills, you name it.
Now, is that I saw a lot of different things that were wrong with this and just misinformation. So is Hims just drugs?
No.
Yeah, it's mostly drugs. There's a lot of drugs. And sometime I think that I'll do this, in a maybe I'll do a separate video on Hims, just kind of like walking through what it actually looks like to apply to that. I wouldn't go through all the way through, but no, they ask and they give you a lot of different tips about like sleep habits, nutrition stuff. They have a nutrition product line as well. And
so then I looked into what Hims and Hers is peddling, and it turns out what they're essentially selling is unregulated Ozempic, something called compounded semaglutide, which the FDA has not reviewed, approved, or tested for safety or efficacy. In fact, the FDA website right now has a warning about these unapproved weight loss drugs. They're talking about cases of hospitalization due to dosing errors, possible counterfeit Ozempic. There have been hundreds of reported cases of adverse side effects just in the last couple months alone, and I'm sure the real number is probably way higher than this.
All right, so is Hims skirting the law, doing something sketchy that's nefarious and is going to hurt a lot of people? What was wrong with what he said there?
I mean, there's a bunch of stuff. First of all, the dosing thing, like, dude, do you understand that I can take 20 Advils tonight and it would have an inverse effect on my life, probably.
Oh, yeah.
So like anything in insane doses would have an inverse effect. And then the other thing is, like, you have to understand that Hims takes you through this process of making sure that this is the right solution for you, whether you're going through the funnel for GLP-1s in general. So it's not like you can just go get bootleg drugs through Hims and there's no checks and balances there. And then the other thing is that, like, compounded drugs are as a result of this shortage situation, and then all of these compounders are doing it, not only Hims, but everybody else. And so that's something that, like, the way he's making it sound here is that Hims is actually doing this like black market type of like shady, behind the alley type of deal to sell you this weight loss. And the fact of the matter is like when the shortage ends, no compounder is going to be allowed to do that anymore.
Yeah, yeah. He doesn't seem to understand what compounding is, and it's just there's some medication out there that the owners of the rights to that medication they cannot keep up with the volume, and so the FDA themselves are like, okay, it's go time. You guys can compound all you want, and when the shortage is over, the FDA will pull that back, and so semaglutide will be removed at some point. They compounding facilities, is it just kind of like black market and there's mice running around? And no, it's the opposite. These are very, very well regulated facilities that are investigated all the time and have to pass all kind of different safety checks. So whether HIMSS does it or somebody else does it, it's all pretty much the same. And they have to be very, very careful because there's a lot of scrutiny for this. As far as side effects, like, this is funny. The ad doesn't talk about any of these side effects. Well, they're not pushing any particular medication. Now they're hinting like weight loss, but is this even the only weight loss medication that him has? No. They have their own oral solution, and they actually prefer people to use it because they can keep that. It's not quite as effective as GLP-1s. Bang for the buck, though, it's a lot more. So,
so two things I want to add. We've been talking about HIMSS in the context of them, having a 503B facility and how this allows them to expand their own compounding. That facility is registered with the FDA. So there is checks and balances in place. And then I think that, I don't know, we can have a conversation around this. I understand the argument of saying, hey, they're not trying to push one product line specifically, therefore they shouldn't have the disclaimers, because in the ad themselves, they do showcase the oral weight loss as well as the injectables. I still think they should have had some disclaimers. It would have made the ad less sexy. But again, I think if we're splitting hairs here and you have all of these big corporate, big pharma groups that are out to get you, don't give them more ammunition,
Might have been good to have like 2 seconds of that.
Yeah.
Because, well, like you said, Tevis, and you've covered this as well in a separate video, which I thought was very well done. Big Pharma tried to get this ad taken down just because they know how disruptive HIMSS is in the market. Throw up June's comment, if you don't mind, the most recent one. I thought that was good too. The other thing is the side effects are identical. Like compounding, this isn't some like new formula or slightly different formula. This is the formula of semaglutide. That's exactly what it is. So the side effects are one and the same. There are side effects. There's some that are good. There's some that are bad. I don't personally take it. I don't plan to ever. But yeah, the way that this guy talks is like, well, we'll go on.
Ad doesn't talk about any of these side effects, which I'm pretty sure is illegal for a pharmaceutical ad. And in fact, they just tout their products as quote unquote the future of health.
This is the future of healthcare. This is HIMSS and HERS. Join us in the fight for a healthier America.
Absolutely criminal.
Is it criminal? It's way too overused. This guy's probably, I've never seen it before, but I'm guessing that probably all of his videos are like way over the top like this. But I mean, it's just like the level of sheer ignorance. Like you can be like, hey, GLP-1 products, I don't like them. I don't like what HIMSS does, this and that and the other, but it's way over the top. But I think it's one of these cases of most media coverage anyway, whether it's positive or negative, ultimately is good for brand awareness. So I don't think this is a bad thing for HIMSS. And I see, this is one of many solutions for weight loss. It's not people should only diet and exercise. Sometimes they need a little bit of help. It's, I don't know, measure and see if it's right for you. Myself, no, just diet and exercise. Probably why I look the way I look.
I think a lot of those like TikTok, the content, the form factor for TikTok in general just like pushes so many creators to go for big views and to go for the controversial thing because it's so short of a time frame that you have to keep people's attention there, that you're sort of just going for like the hook after hook after hook. Whereas like a YouTube video, you have 20, 30, 40 minutes for you to actually walk through and explain some of your points. So
Sorry.
Whenever I see some of those, like, and I saw this guy got, I think James is his name. He got a lot of traction on that video.
Oh yeah.
So I get it. But it's one of those things where, I mean, we've said this in the past with regards to hymns. It is in a space that has a higher knowledge barrier to entry. Like, people need to know what they're compounding. People need to know the regulation. People need to know what the prospects are for new product lines. It's not like they're just like a newspaper company, like, like it's not a very like black and white type of thing. And in that, there is a lot of misinformation, but also in that, there's a lot of opportunity for you to actually do your homework to get an edge over other investors who don't.
Yeah. It's kind of interesting just how much or how little is actually understood correctly on HIMS, and yet somebody is buying it, and it's very heavily shorted too. So it's like somebody is really, really, really wrong and offsides. I think that we're probably not even done with the 20s yet on HIMS. It would not shock me if we see it come down to the upper 20s at some point, especially when semaglutide is removed. Not if, but when, from the compounding, or any little thing in the earnings that people don't like, or just somebody sneezed, or an unrelated product, like a headline comes out. So yeah, that doesn't surprise me.
Yeah, like I am now sort of like hoping that HIMS comes down at least before earnings. At least we have a pullback, because it's going into earnings so freaking hot. And I mean, somebody asked about SMCI too. Like, my overall take is the same. Like, you have these stocks that are going in super hot into earnings, and there's so much pre-baked in expectations that it's overwhelming. Like, it has to be spectacular, knock it out of the park type of numbers for it to keep going on that rally, because there's so much like gravity pulling it down. But at the same time, like, I think that something like this could be the catalyst that brings it down, because if they do have a lawsuit, let's say, and they needed to put a disclaimer, and for a 2-sentence disclaimer, they have to pay an extra 20, 30, 40 million dollars on top of their 13, 14 million dollar ad, then that would bring the stock down quite a bit, like maybe $5 or so, $6, who knows. But I think, and Manuel was saying this last week, and I'm going to ask his thoughts on it on Wednesday when we talk again, but every single earnings for like the past couple of years, like, there is always some negative press that comes out a couple weeks before earnings. And so I'm just wondering whether this is it for this time around.
Yeah.
It's all noise, but I'm just saying, like, what is the noise this time?
Yeah. Amazon already reported. So like, I was thinking there might be something that bears use on that. Just like, oh, Amazon Medical exists. Let's knock off 20% of it. Like, we've seen that already, and this time it didn't happen. So I don't think that. I think that one's kind of out. There might be. Is there any? I don't think there's anything on the radar as far as FDA shortage list stuff for tirzepatide, which they don't have. It's semaglutide, but that's another potentiality. Could just be a valuation thing. But yeah, it seems like it's probably it, unless there is a lawsuit coming, which, I mean, would really not surprise me at all. Big Pharma tried to prevent the ad, and it wouldn't shock me if they're like, hey, even if we know this lawsuit is not going to go anywhere, let's do this just to try to do anything we can to slow down HIMS. Honestly, like, where they're playing at this point, it wouldn't shock me.
Yeah.
They're nervous. Like, I don't think that we showed on here. Do you still have that letter that you highlighted up? I think that'd be a good addition. Like, this is so over the top. It actually shocked me.
I have to scroll a little bit. All my recent posts have been like HIMS.
Yeah.
All right.
While you're scrolling on that, you mentioned SMCI. Are you in SMCI?
Nope. Somebody asked me about it. I'll just bookmark stuff, and then we can get to them at the end.
Okay.
So yeah, this is a snippet of the letter that I highlighted, but I can find the full letter for you. I think I tagged it somewhere. Yeah, misleading, incredibly irresponsible, substantial risk, misleading advertising by compounders. So here we're lumping them all together, all the compounders, as if Novo Nordisk never misled anybody in their career. We call on the FDA to take swift action, continuing to mislead the public, dangerous commercial, protect Americans. You get the gist. Yeah, I mean, that's not the main thing that I wanted to highlight. I wanted to highlight this.
Oh, yeah.
Maybe we can play this.
Yeah.
Because HIMSS does not get a lot of mainstream media attention. They've been featured on CNBC a couple of times. I think the most recent instance was when Dr. Marty Makary was appointed into his role. But they did get CNBC attention after the Super Bowl ad. And let's just hear how they're talking about it. It's only 1 minute clip. Roy, have you seen this before?
I don't know. I actually didn't. I saw that it existed, and I haven't had time.
Yeah, because you liked this post earlier today, so you're blindly liking my stuff now. I love it. All right, let's play it.
Telehealth provider Hims & Hers Health airing its first Super Bowl ad last night, but not without some controversy. Brandon Gomez is here to explain all of that. Brandon?
Hey, Scott, good morning. Yeah, no shortage of flashy ads last night. And if you didn't catch what we're talking about, take a look.
Welcome to Weight Loss in America,
Like and subscribe.
a $160 billion industry that feeds on our failure. There are medications that work, but they're priced for profits, not patients.
This is America.
This system wasn't built to help us. It was built to keep us sick and stuck.
Now, Hims goes on to promote its weight loss offerings with images of compounded GLP-1 vials, basically copycat generic versions allowed to be manufactured during a shortage. Well, the ad faced pushback from big pharma and lawmakers heading into the weekend. The FDA was urged to look into it for false advertising, neglecting to include warnings or side effects of taking compounded versus FDA-approved branded Ozempic and Wegovy. Now, the FDA told CNBC it takes its responsibility to monitor promotional materials very seriously. I did speak to legal and advertising experts over the weekend as well, and the general consensus is that since Hims doesn't explicitly promote a specific drug in the ad, it was fair game. Now, Novo still this morning responding with their ad that you just saw, taking aim at Hims in USA Today and the New York Times, called Check Before You Inject. Carl, Hims shares up fourfold in the last 12 months, but a reminder to investors, the clock is ticking on this tailwind since the shortage will eventually be over.
It's the same thing. It's exactly the same thing. It's no different. It's oh my goodness, dudes.
Dude, check before you inject, like it's fucking fentanyl or something. Like it's
exactly
a compound version.
Oh my goodness. Yeah, it wouldn't surprise me if that TikTok guy was, somebody that Novo Nordisk is like, hey, could you do something on Hims? Here's some ammo.
Yeah, so essentially Novo issued that ad like immediately after the Hims commercial.
Yeah.
Drama all around. But again, I just want to bring up Manuel's point from last week. Like, where was all of this drama before? All of a sudden, because they got a Super Bowl spot and because they now have that massive platform, now you have all of these groups and all of these large companies upset. I take it off for Joby, says, I love that app.
Love the name. Throw up Cole's comment too.
Yeah. For answer fentanyl, accuse someone of Trump.
I honestly, like, if it's a company that I know anything about and I see this kind of negativity, no matter what the stock price reaction is, normally expect it to go on the downside. I get excited because it shows how credible the big pharma, basically, the establishment is seeing Hims as a threat. Because if this, like, note that they're not doing this like with Roe or anything like that. There's a lot of little competitors out there. I view Hims as basically the future leader in this type of business. It's not pure telehealth. It is a data play as well. They've got a lot of products that are coming on the roadmap too. But they are, I believe, the future leader in this space. And a lot of who they're going to take revenue from is at big pharma, which already has a lot of headwinds just because of the nature of Maha and under RFK Jr. So I would not want to be in big pharma right now. That's just all I'm saying. And they are showing it. Boy, are they showing it. So yeah, Tevis, my prediction, I think by this time next week, we see a lawsuit against Hims.
I would not be surprised if that happened, honestly. I think they have the firepower to be able to bring something like that on. We'll see, right? Because like I know the FDA is kind of paralyzed right now with everything that's going on, and I'm sure that when they come back in full steam, like this will not be their biggest priority. So we might not see a lawsuit, but we might see some more bad press and some more FUD around. And look, if Roe had a Super Bowl ad, they would be targeting Roe as well, or any other compounders. The point is that this is a cash cow for these companies. Like I mentioned even before on X, like Mounjaro as one single product line and then they have Zepbound as well, Eli Lilly. Mounjaro as one single product line did $11.5 billion in revenue in 2024. That was 124% increase year over year. Like this is a massive company, and they would do a lot to protect their market share that they have right now. And that's like that's all the motivation you need, right? Show you the incentives, and this is the result.
So you want to talk some Tesla then? Hims is earnings. It's not for a couple of weeks, but Tesla already had earnings. It's one of those names, like PayPal. Actually, I think I only have two in my portfolio that are down year to date, but these two are. And yeah, Tesla is kind of doing what it did last year, where it just started off okay and just a slow, steady march down. I don't know if that'll continue or not. Let's pull that up. I knew that, yeah, we did go down 3% today. I knew there was some additional. So let me show the chart here. Let's talk a little bit about this too. Are you, by the way, adding any to Tesla? I know it's a massive position for you.
I did more cash secured puts on Tesla today at the very, very like right before close, and Tesla was at like 352 or something. And I said, wow, great job, Tevis, with your amazing patience and discipline. You got at the cheapest price of the day. And then immediately, as soon as I put on the order, it fell like another $3. And I was like, you fucking idiot. So we'll see. It's just a weekly. We'll see if I get assigned on more shares or not. But honestly, man, like I think I am like probably among the most bearish or close to the most bearish that I have been since owning Tesla. And you might think that's stupid with the bots around the corner, but I don't think they're as around the corner as we might think. And I think that the more immediate reason why I'm growing more bearish on Tesla is because Elon's mind share is just so fragmented. Even this OpenAI thing, which I mean, I want to talk about that. I have only read sort of like the headline around it, have a very basic take, but that is all like bad stuff for Tesla, man, because if he makes an offer or if he gets into another like petty spat or what, like anything that he does that's not that diverts his attention from Tesla or that potentially forces him to liquidate more shares is not good for Tesla. And I mean, they've missed numbers 5 out of the last 6 quarters. It's just like, I don't know. I feel like people are going to be waiting a little bit until the bot story starts to play out. So we'll see. But
yeah, autonomy, I think before that too. But yeah, beyond that, and I think that those are part of the reasons why Tesla is falling a little bit. It's just down, 8.5% year to date. It's down another $3 in the overnight market. So, and it's just because you bought cash secured puts, Tevis. I think that's like the main reason. And then like everything else is like just the little bit of extra that it might be the reason why. But, retaliatory tariffs are certainly part of it. We saw the way that Canada, at least under Trudeau, I don't know if they've actually went through it or they're just talking about it and it's a bluster. But it seems like that they're going to target retaliatory tariffs and gear some of those towards Tesla themselves. Now, Canada's not a major market for Tesla, but there may be other countries, including China, possibly, although they manufacture over there. So I'm not quite sure how that would work. The EU, Trump mentioned that tariffs are going to come out in the EU, and that would definitely reduce the amount of cells if there's heavy tariff walls, especially targeting Tesla. Plus, we have higher for longer as far as interest. Waymo seems like it's doing a good job of scaling, and we haven't seen the scaling impact of the refresh Model Y, which I think will be substantial. And also, we haven't seen autonomy like really be unleashed as far as the full self-driving that's unsupervised, which is supposed to happen this year. Now, if it doesn't, Tesla is way, way, way too high. But if autonomy hits the ground running, it goes well, and then they can scale it from there. I mean, Tesla's probably cheap. And so it's in this weird in-between area for me where I'm trying to load up on Nvidia, my newest position right now, doing my normal DCAing into Robinhood.
Mhm.
And outside of that, like I have a few things on the radar, but I'm not buying Tesla here, waiting for more money, basically.
Yeah, I mean, the Canada retaliatory. First of all, I thought retaliatory tariffs were not like tariffs for political reasons were like a really gray area from a legality perspective. Um, and then the person who came on CNN is like such a freaking polarizing character. I just like it's these people that get a platform where now you're talking on behalf of all Canadians. I'm sorry, who are you? He is the leader of a minority party in Canada, like the third, or I think actually the fourth now, the fourth biggest party in Canada. Like what? It's basically somebody running as an independent who gets on BBC and says, "Hey, we're actually gonna do this and that with the UK," and people are like, "What?" and it absolutely holds no sway in actual decision making in Canada. He thinks he is going to be the next prime minister. He's absolutely delusional. His approval ratings have gone through the floor, and the fact that he can say whatever he wants with no seemingly, no repercussions at all is, well, I mean, it's just, I don't know. But I think the tariff situation as a whole, like if we zoom out of that, I think that is going to not be good for Tesla because of Elon's association with Trump.
Yeah, I agree. Like it. So like there are real reasons why it's being pulled down, and if that continues, and it definitely could, we could see mid 200s again. I don't think we're going to see, like 150, 130. Like some people, I would love that. That would be fantastic. That's an easy buy right there. It's harder to buy Tesla, even though we know, the potential of it. We know long term, not just for the stock, but the company. But I already own, a good portion of it, and it's trading on a narrative right now that may be further out than previously hoped. And yeah, I think Elon just not having the brain space for Tesla right now too has an impact.
And dude, like, don't get me wrong, I'm super bullish on Tesla, and I think that if anyone can do it, Elon has proven time and again that he can achieve those seemingly impossible feats. I just think that people are, a little bit high on hopium on how much of an impact these bots are going to have and how soon they're going to come. I actually had this debate. I might have mentioned this last week, but I had this debate with a friend of mine, and he thought that Tesla was going to perform better than HIMS over the next 5 years. I'm like, dude, one's a $9 billion company, one's a $1.2 trillion company. Like, please explain. And he was like, no, but bots. And I did the math, and I was like, if they execute perfectly, like everything goes perfectly, they'll have about 800,000 bots in 5 years. If everything's perfect. And that's like assuming a 5x in production every year after year after year, which I don't think they're going to get close to that. But that's if all of that happens. And then what? Tesla's going to do a 10x. All right. Well, HIMS is still $9 billion market cap with only half of their product roadmap rolled out. Like, people are just so blindly standing for Elon And like, I get it, but at the same time, you have to ask yourself, all right, let's take a look at this, not in a vacuum, but in relation to all the other things that's going on in the market right now. I just think that it's at a point where other than FSD, I don't really see a catalyst that justifies it being here. And this is coming from a super Tesla bull, guys. I just don't see a catalyst for it being here over the next 1 to 2 years. And I think FSD is going to be great. And I'm looking forward to the Austin and the California, unsupervised FSD rollouts. But if those, like, there's execution risk baked into those, and if those don't go well, or if regulators have a problem with it, or whatever else happens, like, you're looking at a $1.2 trillion company that's not really growing that much, that's missing all of their numbers, and that's getting pumped on the hopes of robots changing the economy in a decade. All right, cool. Do you want to wait a decade for that to happen?
Throw up Nev 2022's comment. I thought that was astute.
This?
Mm-hmm. Yeah, I wish people would acknowledge the fact that a lot of people despise Musk now and will actively boycott his products. That's always been the case somewhat. I've seen that ramp up a lot recently, and I've heard that from other people that are driving Teslas too. So I think part of that is it's one thing to be Elon Musk and say controversial things, and people will do that. But I mean, without Elon Musk, I don't know that President Trump would have gotten elected. Maybe, but he's certainly associated with that. And he has a prominent seat in government basically because of Doge, and is he's putting everything out there too. And a lot of what Doge is eating at are some people. I guess I won't go too much into the politics of it, but like the USAID and a bunch of other things. Some of it I think is over the top, but
dude, but like
he's basically taking off people that have power and money, and there's usually some blowback as a result.
There's Tevis on Tesla is like Tanner on TGL. Look, man, I hope I'm bringing salient points, and I hope I'm actually making sense, because I am bullish. I am still holding the stock. I'm just holding it more uneasy than I was before. Because here's what I'm seeing right now, right? This idiot comes on and he says, we're going to retaliatory tariff on Tesla 100%. And it's like, dude, do you understand that your words have repercussions? And people here are so, how can I say this? People in Canada are so susceptible to what they see and read in the media that the last time we had tariffs with the US, people started flat out boycotting. The government started flat out boycotting things, not tariffs, boycotting. And people started booing at basketball games, hockey games, and became a very emotionally charged conversation. People are already vandalizing freaking Teslas up here because of that Elon association. Cybertrucks are getting spray painted on both sides of the border. And you have to then ask yourselves, okay, well, now the end consumer is suffering for the politics of the CEO of that company. Really? Yeah, of course there's going to be an association there. Elon has always been a polarizing character. And with a polarizing character, you're going to have staunch defenders who are stans, and then you're going to have staunch advocates who are against everything that he does, and essentially have like Elon derangement syndrome. I think that has gotten worse given the power that he's got. I think he's doing tremendous, amazing, very necessary things for Doge, but it does two things. Number one, it takes away his time and his mental bandwidth from Tesla at a very important time. And then number two, it charges people up even more when you're talking about a tariff war. And now all of a sudden our politicians are targeting him and his companies specifically as collateral damage for his politics and his association in government. Like, I don't agree with that. I don't think that that should be an association to make. But the fact that people are making it as a shareholder of Tesla makes me more worried to be holding it, because I don't want to get hit with strays over here just by holding the stock.
Yeah, and I agree with all that too. The other thing, and you alluded to this before, do you have the headline, or do you want to talk about the OpenAI thing with Tesla? Because I was commented on. I think that's very relevant.
Yeah, I can just search it.
So bottom line is, I don't think that this is serious. Like, Elon will float out some things, and there'll always be rumors of like you remember like the Tesla phone, it's like that's never going to happen. And I think that this might be one of those as well. I don't really see a reason why he would actually buy it, especially with Grok and LLMs really being commodities, other than just him being annoyed that OpenAI is closed and he doesn't like Sam Altman. I don't think that's enough. I don't think he sees it in the same way as Twitter, now known as X. But in that whole time, I was a shareholder in Tesla, just with a few shares, not much, just enough to kind of keep my eye on. That caused the share price to really just collapse. And great opportunity for me because I had barely any Tesla, and I'm like, great, I'm going to start buying heavily. But if this happens, even if there's just heavy rumors, like it's going to be a drawdown on the price.
Yeah, look at this.
Risk.
You have to take that risk, Tevis. It comes with the benefit of having Elon at the helm. My gut says absolutely it does, and absolutely I will. But then I think to myself, I'm sorry, what's that benefit, dude? They've missed 5 out of the last 6 quarters of their results. I think their revenue was up single-digit percentages. And sure, they're going through a tough time, but the shares haven't really moved in the last 3 years, other than when Trump was, when he won that nomination and he became, in November, basically, when he was voted in as president. And I'm like, okay, well, so fundamentally the stock won't move, but the stock will move because of something that happens from political angle. What is Elon, like Anthony Noto, for example, or Andrew Dudum, always triple beating results, always setting expectations low and crushing it. And for the last couple of quarters, I just haven't seen that same level of, Elon being locked in. Dude,
yeah, he doesn't.
Before the Trump administration association, there was the Twitter acquisition. And it's just and before that was the time when Tesla really actually achieved some profitability and was getting the ball rolling and everything was good. And the stock did a 6-7x. But for the last couple of years, the stock has reflected Elon's attention being diverted. And that's all I'm trying to say. If he is locked in, there is nobody on earth like him. But the fact is that the guy has 6 companies and he's in charge of now cutting all of trillions of dollars of deficit from the US government. Dude, can he do it? Sure. That's why I'm still holding the stock. But I'm just trying to present a counterpoint as somebody who's bullish, as somebody who is confident in the future of Tesla. We shouldn't go into this blindly. I was skeptical and criticizing SoFi last week because of management's communication as a shareholder, as it's my biggest position. And I'm doing the same thing with Tesla today because I think it's your responsibility as a shareholder to ask these questions. I do want Elon more in. I think if Elon's more in, I'm more in. But for as long as that's not the case, then I'm 1 foot in, 1 foot out.
Yeah, I'm not out in the fact that I'd sell shares. I only sell shares if I need the money for something. I actually did take off. I sold a few shares when I needed to roll out calls on Hims and Hood and Palantir. So it's I need some cash. They're all running on me, and I don't want to give these up yet. So Tesla is one of those. When it was in the 400s, I'm like, I'm going to take a little bit of money off of this. With the plan of buying back those shares. It wasn't a large amount. It was 5 or 10 shares. So, but not a serious sell. Yeah, there it is. That would be a lot of Tesla shares. How much was the Twitter purchase price? It was
44
Yeah.
billion. So, okay, backstory to this. Let me just pull this down for just a second. Oops, not that. Let me pull this out. So essentially, Elon and Sam Altman have this past where Elon was one of the co-founders, main investors in OpenAI when it was a not-for-profit. Then Microsoft bought it for a whole bunch of money. I think now it's valued at 200 billion or something ridiculous. And Elon started Grok, and they had a falling out because essentially OpenAI became for profit. Now that Trump has gone in, we also had spats. And that's the other thing that I'm scared with Elon is what if he has a falling out with the administration? And it could happen, man, because he's somewhat of a mercurial type of person. He doesn't Like he'll just say something, and he's very, and that's what's led to his success. But anyways, I'm going into rabbit hole. Like Sam, I think, got this deal, and Roy, you might know more about this, but basically Sam got a benefit from the administration, and Elon started like bashing him on X, and that was not a good look. And even now, like he posted today around like Sam being a scammer and all this other stuff. Trump was asked on this, and Trump was like, "Hey, look, like I've done business with people that I don't like, so Elon just doesn't like him."
Yeah.
Okay, great. Now we get this. Okay. Now, an Elon Musk-led group makes a $97 billion bid for control of OpenAI. Unsolicited offer complicates Sam Altman's plan to convert OpenAI to a for-profit company, which it basically is right now. It's a group of investors. And essentially, I really like this take here. I'll stop sharing and pull it down because I agreed with this. And this guy is fairly bearish on everything, but I follow him sometimes just because I kind of want
talking about
contrarian takes. So, okay. Elon Musk offers the consortium that owns OpenAI a $97 billion buyout. Quote, "It's time for OpenAI to return to the open source, safety-focused force for the good that it was. We will make sure that happens." Great. Sam responds, "No, thank you, but we'll buy Twitter for $9.74 billion, just being cheeky, if you want." And Elon says, "Swindler." Like, okay. Now, I agree with this take here. There's a lot more going on here that people realize. Investors have spent or loaned OpenAI over $200 billion by offering $97.4 billion. Elon is implying that it's worth less than book value, that money was stolen. Sam can't sell because it would require him to open the accounting books. And if there's one thing that we know with Elon and his past lawsuits and whatnot, it's that he'll do a lot of this stuff just for the discovery to come out, and they'll settle even before anything gets that far because they don't want discovery to come out. He's done it before with OpenAI, where he basically sued them because of their name or something, or because of their status, and then they settled, and it was all good for a while. But like, this is, again, and I want to get your take on this, but what is there to reassure me as a Tesla investor that I won't have to deal with drama bullshit like this in the future? Like, he and Sam had a falling out. He created Grok. He sued them. He said, "Oh, you guys should be closed AI because that's what you are. You're the furthest thing from open." They settled. Great. Dust settles. We can focus on Tesla. Now this. Dust is going to settle on this too. But like, there's no guarantee for me as an investor in Tesla that this won't happen again, that this is not an overhang on the stock. And this is exactly what I'm saying. Is last week or 2 weeks ago, I came on here and I said, Trump is picking too many fights with too many countries at the same time vis-a-vis tariffs. Elon's doing exactly the same thing, man. He runs like 6 companies, picking fights with everybody, picking fights with Democrats, picking fights through Doge, picking fights with Sam. And I'm like, dude, I understand that you need to be in a constant state of crisis to always perform at your best. But like, it's like that meme, where like the kid is drowning and then like Tesla investors are like that skeleton in the bottom of the ocean. So yeah. I don't know.
Yeah, I mean, it feels like that as a Tesla shareholder, and it's not. I'm not basing that on price action. Like, I'm way up for shares that I've been buying. So, yeah, you're buying drama is what's happening, and I don't think that this is something that's just going to go away overnight. He's always done things like this, and it seems like he's always picking fights here and there. But this time, with a lot of very powerful people on the government side, Sam Altman too. Who's forgotten in all of this? Mark Zuckerberg.
Marcus, yeah. Did you see that there was a leaked memo for Meta? And basically in that leaked memo, Mark was like telling his people, prepare for a wild year.
No, I didn't see that. But yeah, Mark is, I've always thought he's a great CEO, but I didn't like him. He's a lot more based now. So I wonder if Elon is kind of like, Mark's not that bad, but that Sam Altman guy, he must die. Not really, but honestly, Elon Musk, if he feels this strongly with Sam Altman, there was a let's see, who is it? Cato the Elder. Have you heard of Cato the Elder before?
No.
He was a Roman politician, a senator, dating back to a little bit before they were still a republic, but before the Third Punic War against Carthage. And his whole thing was like he hated Carthage. There's reasons for it I won't get into, but every single speech that he'd have in the Senate, whether it was just about like building more roads or equipping the legions, he would end it with, nevertheless, Carthage must be destroyed. And it feels like Elon has gone to that extent with Sam Altman, that just as much as he can, he loves to attack the guy, loves to attack OpenAI. And, you know, the drama is kind of entertaining and stuff, but it's like, dude, could you just focus? Elon is more capable than almost any human on the planet, but focus. Don't bite off more than you can chew. So, yeah. Scipio Africanus was ultimately the one that led that, I think, for the third Pinot. It wasn't Scipio. I think it was him.
I love the history buffs in here. Yeah, man. And like, you can really tell which CEOs are locked in and which aren't. And I think Elon has been able to hide it for so long because he is so freaking efficient and effective with his time. But can you imagine this guy if he didn't have all of these other companies and Tesla was the number one thing that he focused on all the time? Like, he would be hyper analyzing every single department. And like, I mean, I read in the Isaacson book as well, there were times where he was just tuned out. And then there were times where he came back to the helm and started just going into the sales calls and like started firing people and completely re-architecting everything. And so he has it within his ability to tighten up and to lock in and to make it really great for Tesla investors. The fact of the matter is that my confidence waning is not my confidence waning in Elon's ability. It's in Elon's lack of
attention.
Yeah, exactly.
Yeah. So time will tell. I think that we might get another opportunity to load up on Tesla, and it may be, you know, a year or two before we really see it run up. Like, I think it has to be more than just a narrative, that there has to actually be autonomy working well, or bots beginning to fire up, and then you can envision some of that extra revenue, or even the Y just becoming the best-selling vehicle in the world again. I think the refresh one will probably do that, as long as they can scale and there's not as much political drag as, you know, some fear. I think there's some, but I don't think there's a lot. But yeah, it's this year anyway, for Tesla being down, you know, a little bit less than 10%. It's like, yeah, it feels about right. Like, it went up a lot. There's a lot of negativity right now. The earnings were not the best. The call was good. But yeah, that's kind of where we're at. And we've been on this roller coaster before with Tesla. The nice thing is, it's not too volatile of a stock, nice and tame compared to HIMS.
Yeah, and I don't think any Tesla investor is really complaining, because like Tesla did go up 86% over the past like 1 year, basically. But again, if you really look at it, it was largely due to that Trump pump in November. And if we didn't have that, then, you know, the stock would not have been up 86%. And there's like 3 years where it basically stalled. And so a lot of that stuff was gains that we should have had over that time period. I'm just saying that going forward, to just be skeptical, and being skeptical will make you money over time, because even if you choose to hold Tesla, or if you choose to sell Tesla, at least like you will have steelman the opposing view, and you'll be better off for it, because you're not operating in a vacuum, just in a one directional stance.
Yeah, absolutely. Anything else you wanted to discuss before we jump into comments and we start looking at those?
I know you have Hood weekly, but what are you expecting for Hood earnings? I know that's on Wednesday. I will be trying to tune into that call.
Yeah,
maybe just get the spark notes afterwards.
Yeah, Mitt, Tanner, and I are going to be covering that live. It's after hours on Wednesday. That will be one you won't want to miss. A, because we're covering it. B, they're going to put up something around 100% year-over-year revenue growth, smashing any kind of expectations from like 6 months ago, including us as mega bulls. C, they're actually doing a video earnings call. Not many companies do that. I think that'll be a growing trend. We've seen their participation towards retail really pick up. And there's a lot of commonalities between the culture at Robinhood and the mission mindedness, and the making sure that they're not siloed at Palantir. And so it makes sense that they're kind of following Palantir's lead in this. I did see some comments earlier on the EPS predictions, and one of those challenges, let me actually pull this up here. That's Bootleg Weekly. Here we go.
For people
up a little bit higher from this, but
And so while Roy pulls that up for people who are new here, we do take questions at the end of this stream. So you can ask and I'll bookmark them. And in the last 10 minutes or go, we'll try to get to as many as we can, but no promises. Yeah, go ahead, Roy.
so yeah, throw this up here. This is just kind of showing that consensus EPS as it climbs for this quarter. So, you know, a year ago, people were like, meh, doesn't exist. Like, just freaking tear. I think 53 cents is actually where we're at now for consensus EPS. There are 50 something analysts that are looking at this, and it seems like a lot. Tanner and Amit talked about this on our last Robinhood Weekly, which we had to do in the weekend just because we want a different time schedule thing for this week only. But what I felt like that they missed, but I didn't look at the numbers deeply, and I think that Tanner has come to this point as well, is that 90% of Robinhood's costs are fixed. Doesn't matter whether they're in a massive bull cycle and things are absolutely great and they're having crazy amounts of volume, launching new products, this and that, or if they're in a bear market and things are really, really bad. So in a bear market, that's not great because it's harder to shed some of those costs. But in a bull market, and they're very much in a bull market for crypto, especially, like they're just going to have ridiculous numbers. I think the best that they've ever had, and it's not even close. Equity bull market as well. All their products seem to be doing very, very well. Credit card is a little bit early, but regardless, 90% of their costs are fixed. So the fact that it's just so bullish this cycle is for Robinhood, and that they can control so much of their costs, I think accounts for that EPS. Now, I will say the EPS target that the street has on Robinhood is very high. I think that they might meet it. If they exceed it, it won't be by very much. And the reason why we know this is Robinhood doesn't do guidance, but they do give us the monthly numbers on a lot of their core metrics, on 8 actually. And so we don't know every single thing about Robinhood. There may be some up or down surprises, but just not as many with most companies. And so looking at that and the volumes that they post is like, hey, something close to 100% year-over-year revenue growth, which is insane with controlled costs. But there is a little bit of a drag as far as some contra revenue that they use for some of the matching stuff for this quarter more so than others. And so there's a possibility that they post this amazing quarter of insane EPS growth and insane product growth and insane revenue, and it's a miss on EPS, and the stock gets pulled down. Now, the other thing with Robinhood too is it's really, really flown up. I should have actually kept that. Let me see where it's at year to date. 42.67%. Hood was my runner-up candidate for our competition on when we did our SoFi gift giving thing. It's like,
That's what you got.
If I can't give Hims, it's going to be Robinhood again, because I thought that I didn't see it going this aggressive though. But like anything can happen with those earnings. We could see Hood fly up to like $70 a share. We could see it fall down to $40 a share, and I'm prepared either way.
Yeah, I think like it's $56, $57 by the time earnings rolls around. It's probably going to be like 58, 59 with just the trend that it's going. Like even if it loses, 20%, it's still going to fall down to like 50. Like it's not going to lose a lot because it's gone up so drastically. Like, what do you expect it to lose, like 30% off of earnings? That's just being unrealistic. Like maybe if you have a shock factor, you're going to lose 20%, and you're just like, oh, God forbid, you're back to 50.
Yeah, where we were 2 weeks ago. It's I don't know. Like there could be a combination of that, a pullback in the market, and then like there is some correlation to Bitcoin's price action. Not a lot. The institutions are very heavy in this too. It's one of the heavier institution names that I own. But yeah, like if I see it pull back to like 45, I've been doing a DCA in Robinhood. At that point, I'll be looking for a few things to trim so that I can get Robinhood up to where it needs to be in my portfolio. When I see a name and I'm like, hey, I'm a lot more bullish on this company than my allocation actually indicates, I look for an entry in that. And if it's kind of expensive, and Robinhood is kind of expensive right now, it's just a DCA strategy. But on those big dips, oh man, And we've seen it before. We saw it twice last year where Robinhood posted amazing numbers, well above expectations, and they got crushed. Ironically, their most recent quarter, they posted not as good numbers as we expected. Contra revenue is part of that, and it was honestly a failure of Robinhood. They did not communicate clearly that this was happening and this would be a realistic possibility. They've corrected that, but I mean, they just dropped the ball, to be honest. And you know how much I love that company. But yeah, this time I'm not seeing anything like that. We'll see. The best case, and I've said this before too, like names that I'm very, very bullish on. I love it. It doesn't happen much in a bull market cycle, but I love it when they post amazing numbers and then they just sell off irrationally. Oh man, sign me up for that.
And I do have cash now with you know, the hymns in my wheeling portfolio that got called away. Like I do have cash. I do want to spend that cash on hymns. Like I did write cash secured puts on Tesla for this week that, you know, could get assigned. But I do want to be in a cash type of position to have liquidity for picking up the dip on a lot of these names that do perform well and are sold off immediately. So I think it's just good hygiene to do it during earnings season in general.
Oh yeah, and I'll touch on one more thing, and then we'll get into the comments. My newest position is Nvidia. We haven't talked about it here, I don't think. We've talked about Nvidia a number of times. Ultimately, I felt like this was a good test for the company, the DeepSeek drama, and I just have a hard time looking out into the future over the next 5 years, not seeing Nvidia a big part of this bull market cycle. That a lot of it's geared towards and optimized towards AI. Jensen is an amazing CEO, a visionary, and it's like, you know, by market cap, I think it's number 2 company in the world. And you're like, oh, how much can it run? Well, the thing is, I don't need every single thing in my portfolio to be HIMS. Like it's fun, it's nice in a bull market cycle, but it's very volatile. It's not stable, and I'd like to build a foundation on more stable stocks. And if Nvidia is going to be boring instead of like just growing 100% year over year, which I don't think is even a given, but let's say it just does 40% year over year, like a CAGR over the next 5 years. That's amazing. I will take that. If it just does 25% over the next 5 years, you know, some more and some less, that's good. That's solid. I don't need to hit a grand slam or a home run every single time, but I don't see a place. I just don't see a scenario where over the next 5 years I regret buying Nvidia here. Now it's not going to be a major, you know, number 1 holding, probably even 5 holding in my portfolio. About a 5% allocation is where I want to build it up to. Entered in at like 119, and I'll keep adding to it until it's where I want it to be. Yeah, I could see it do a double in 5 years pretty easily. I think that's conservative, actually.
I can't believe it bounced off that low so fast then. It was at 113 like 5 days ago, and now it's like 133.
Yeah, I mean, so part of it was DeepSeek wasn't all that it cracked out to be. Like, it wasn't a bear case for Nvidia at all. It wasn't like great for Nvidia, but a little bit negative. Not nearly as much as that initial Monday crash shock appeared. CapEx expenditures from the hyperscalers, mega cap, like that's not going anywhere. And I don't know, like there's just so much focus towards and on Nvidia. It's hard to not see them just really, really benefit from it. And when I was looking at it, you know, it's like 113, 115. I'm like, the multiples are not even crazy given how much they're growing. So it just seemed to be like, okay, this is no guarantees in the market, but like over the next 5 years, easy money. Could it just be that it doubles in the next 5 years? Sure, that's great. I will take a double on a pretty safe name like Nvidia. Could it be a lot more? It could. Is it going to do like a HIMS? No.
Yeah, I think the thing with Nvidia is that they have earnings coming up, and we remember Nvidia that pumps on earnings, but the last 2 earnings Nvidia has dumped. And so it's going to be really interesting because the valuation of where it is right now, I mean,
yeah, let me
it was breaking these like multi-year supports. And so it's going to be interesting to see. I think the earnings for Nvidia are on Feb
It's right after HIMSS.
Yeah.
It's like 26, 27.
26.
Yeah, it's so yeah. Here's the chart, and you can see like they weren't quite where they. Well, yeah. So July 10th, 2024. It's basically been flat for, and this was a peak. This was a double top, but we've been here before. We've hit that as well. They've been higher as well, but mostly like the company has grown a lot, and it's been flat for 8 months, which on a name like Nvidia, tells me like, hey, there's this earnings, anything can happen. If it tanks off of good earnings, again, I love that because I want to add a lot more Nvidia, and that'll give me a great opportunity. And if it goes up, I've got my position. It's not fully built out, but yeah, this turned out to be a pretty nice opportunity. Yeah, China attacking Taiwan is the big bear case. If that happens, they are moving away from that being as impactful, but it will be a huge blow for Nvidia.
I mean, that's going to be a bear case for the whole market, dude.
Yeah. That's, alien invasion too, although this is a little bit more likely, but I don't think it's likely. I think it's just one of those things that there will always be rumors of that happening. And if it doesn't happen in the next couple of years, I don't think it's happening at all. Could be wrong. I've been wrong many times. I was wrong about the Ukraine invasion. So, get in the comments then. Or do you have anything else you'd like to cover?
No, Nvidia, I think is going to be an interesting earnings to look out for. I agree with you. I think it's going to be a good pickup, especially if it falls. I'm not really, buying super heavily before the earnings, but if I see that the knock earnings out of the park and the stock suffers as a result of it, then I'll be right there with you, probably buying Nvidia. But again, I'm not really in a rush to build new positions. I think I'm pretty comfortable where I am, especially after HIMSS. I mean, I'm up 25% year to date. So even if I just sit in cash throughout this entire earnings season and just wait it out a little bit and see what opportunities there are, it's from a position of leverage. I don't have to, I don't feel any form of desperation to immediately be all invested. And I think right now I'm sitting on 10% cash or something like that. So 10%, 12%, something like that.
Yeah.
So
I'm down to 4% cash. And that may be gone after this week. I always like to have a little bit going into earnings. It seems like that there's always volatility, and usually there's a bit of a pullback. At least there has been over the last 5 earnings. And almost always there's a name that gets sold off irrationally. This time, I don't own Google, but I thought that one was a little bit silly. Nvidia, though it hasn't had earnings, that was silly. Took me a little while to realize it, but yeah, PayPal, same thing. I bought a little bit of PayPal, not a lot, but
yeah, and there's going to be more of that happening. So it's just a matter of waiting it out and seeing, what makes sense for you. Okay, let me see. Let me see. Top 5 most base CEOs.
I mean, Elon has to be number 1. I would think. Michael Saylor, maybe.
Besides Elon and Saylor.
And I mean, does it get more base than this?
God, what are you going to put up? Oh.
I'm not a fan of his. I don't invest in Meta. I do like him a little bit. This side of Zuck a little bit better, but honestly, I don't know how to answer that comment as well. But we've seen a lot of shift, and it's actually kind of interesting. We didn't talk about this much, but Google is going away from DEI, and I believe Meta has as well. A lot of the large cap that was very, very for this seems like they're pretty agile when it comes to shifting political winds. Mm-hmm. And they realize hey, this is just a drag. It's not doing what we thought it would do, or they just have other priorities. So yeah, so based.
Yeah. Okay. So let me see.
SMCI questions at 711, 710.
Yeah, I was going to work my way through to those.
Oh, yeah. Go ahead.
7:11. You're like an hour.
I'm in Central Time, so 8:11, 8:10.
That's still like an hour ago, dude.
Yeah.
Let me answer this one first. Where did it go? Can you see HIMS becoming a larger position than SOFA for you? Yes, I can see that. I can definitely see that happening. Not only because I'm going to be adding, like if it falls to $20, I'll be adding a lot more, but also because I think the capital appreciation potential is higher, or at least higher in a shorter period of time, I should say, because it's much more volatile. Like HIMS can fall to 20 and then come back to 50, and I guarantee you SoFi during that entire time would maybe go up to 18 and come back to 15. You know what I'm saying? Like it's a little bit different in terms of the volatility there. But that said, I do think that SoFi is going to slowly stair-step their way upwards, and that will be solid. I'm perfectly happy with those two. If the percentages were flipped, I would still be perfectly happy, with those two. So yes, I can see that happening. I think probably Tesla is going to become a smaller percentage. Like I could see Tesla becoming, instead of being like 20%, I can see it becoming 10%, and I can see HIMS becoming higher percentage, because I just feel like it just makes more sense for me. The growth rate, the execution, and the prospects, there's so much ahead for HIMS. And if I had to find anywhere to take that money from, I would probably take it from Tesla, partially because a ton of it, I already booked a lot of profits on Tesla at the end of 2024 that I hadn't ever touched before. I'd never sold like a single share of Tesla in like 4 years. It just added. And I took a ton of profit, and I was like fine about it. It's what led to me buying a lot of HIMS, and I'm not really scared to take more profit on Tesla and just trim it down to like 10 to 12% type of position. But we'll see what transpires. I think I don't want to rush to make any of these moves. Obviously, it took me years to build these positions to where they are. I don't want to just be like, slicing 10% positions on a whim. I want to give it a couple of weeks, think it through, see how the story plays out, and then actually move slower. But long story short, yes, I can see HIMS becoming a larger position.
Yeah, and I'll answer this question. I also see it becoming a larger position for you.
What about for you?
It could. I'm at the point where my own personal rules is if a stock is above 10% as far as my entire portfolio, I can't add to it unless it's an absolute unicorn, one of a kind, doesn't have a real competitor. That's Palantir.
I love how
although I wouldn't be buying here, and I wouldn't be buying Palantir here either. Like it's new all-time high. It's like 118. That's ridiculous. Honestly, I'll just call it what it is.
Yeah.
It should not be 118. It is. This is great. All my covered calls are going to die and drown. That sucks. But
yeah.
So at this point, I just keep rolling and we'll see. But no, and by the way, Alex Karp is probably the most base CEO. Like, love the company, love Alex Karp. The multiple is it's obscene. And as a shareholder, awesome. But anyway, like HIMS, I would say my conviction is about equal for HIMS and SoFi. I don't mind having SoFi at a 10% allocation. Now it's a lot more than that. It's pulled back some too, certainly. And HIMS, I'd have to look. I haven't bought in several weeks. I think when I stopped buying and it was like 30 something, it was at like 8% allocation, and there was room to add. I just waited a little bit. I figured we get a pullback, just off to the races, like Robinhood. These stocks named H, like I don't know, man. It's the year of H and H.
Yeah.
Somebody had told me that they have an HHS portfolio. That's a government acronym for Health and Human Services, and it's Hood, HIMS, and SoFi. I'm like, yeah, HHS is working out pretty good.
I love that. Yeah, and I found it really convenient for you how like you made this rule, but then you built in a backdoor for Palantir. All right.
No, like that Palantir was always the case. Like that's why I went 90% in Palantir back in 2022, which worked out pretty well. ultimately, like unicorns, you can allow yourself to violate the rules, but you need to recognize unicorns as being incredibly rare, and that there's no company that does what they do. And that's, people have been telling me I'm wrong. They're frankly wrong. The market is actually pricing Palantir as a unicorn, so it's on my side actually for a change. But no, like if so with Robinhood, fantastic company. It's not a unicorn. There are other companies that do what Robinhood does, not as well, not with as good a leadership, not the level of execution. I think they're a leader, but that doesn't make them a unicorn. HIMS, same thing, is a great company, great leadership, great vision. Their cost control at everything is phenomenal, but there are other companies that do what they do. Tesla is a unicorn. I do view Tesla that way, but they are. I actually, if I was forced to, let me ask you this, Tevis, and I think I know which way you'd answer. If you were forced to buy, let's say, $100,000 of Tesla or Palantir here, which would you prefer? You have to hold it for a year. Tesla, yeah. I would actually rather buy Palantir here. If forced to, for a year.
No, hold on. Are we doing a trade for a year?
Yeah.
Or, so within the next 12 months, what do I think will perform better?
Yeah.
God, I don't know, dude. I don't know.
I think Palantir, but it would be a trade. I would not want to be adding shares on Palantir at all. Here in Tesla, same thing.
The thing, the fact that I'm not immediately saying, Palantir is going to underperform just speaks to the amount of like cult, following Palantir has.
Yeah.
I do think over the next 12 months, from a stock perspective, both SoFi and HIMS will probably perform better than Palantir, just because there's so much that's already like baked into Palantir already,
Yeah.
But we'll see.
And all of them will outperform Joby.
What's Joby at? Yeah, good old Jobs. $7.83, baby. Good old Joby is down 3% year today. Hey man, it could be much, much worse. Okay, let's go to the next question. Yeah, do we want to do this SMCI question? What's your thoughts on SMCI and its valuation? I feel like it's way undervalued and the narrative is holding it down overall. You want to go first?
Yeah, they've had accounting irregularities, and this wasn't the first time. I won't invest in a company where I can't trust the numbers. And so there's an element to this, not with, I think, every China play. I think there are some that are pretty well established as being genuine. But if there's any doubt that I have in my mind about the numbers potentially being real, I'm just not going to invest. I would rather, and if you'd entered this as a trade, probably you're doing pretty good. But anything can happen with that. And honestly, like if they come out and there is an accounting irregularity with that 10, this would be a 10K because it's the end of the year filing at the SEC, and that gets called out. Oh man, like they're going to get kicked out of the indices. They're going to get lawsuits, and that stock will drag down. Now that may not happen, but you have to keep in mind this wasn't just the first year that they've had those kind of irregularities. And I would just say where there's smoke, there's fire. If you're entering it as a trade, you do you as a trade. I would not want to hold SMCI. I would much rather buy Nvidia or something else if you're really into, or Avigo, or even if you're following Tanner, buy some Shift 4, even with that Isaacman, even Joby. Like I'd rather own Joby than SMCI.
Oof, that's a strong statement.
Not Block though. I would choose it over Block.
Yeah, I don't know too much around SMCI. I don't think I've ever really looked into their numbers. I just know that they're up over the past week quite substantially. They like doubled up in the past week or something like that.
There's been a couple of things, but mostly it's like, hey, we're actually going to publish the numbers that had accounting irregularities, and we failed to actually publish before. It's like that.
They went from $26 to $43. They literally pulled a HIMS in 1, 2, 3, 4, 5 trading days. They pulled a HIMS.
Yeah. If the numbers are accurate, real, and you can trust the company, It's undervalued. It's by a good bit. Like, look at where they have been historically, but I don't think they're nearly as well as positioned as Nvidia. They're not really competitors, more so partners. They obviously do have real products that are doing well, but man, I just don't trust that management at all. So I can't.
Yeah, I think like as a general rule this time around for earnings, I'm just not buying anything that I don't already own prior to earnings. And then if it goes like I said, 5 minutes ago, I'm not looking to rush into new positions. I don't have any, my feet to the fire to jump into new positions. And so if if I wanted to buy SMCI and I'm looking at it, or if I want to buy Hood and I'm looking at it, and they jump up 20% after earnings, I'm like, okay, well, guess I'm not buying that. But if Nvidia reports great numbers and they dip 10 or 15 or 20% after earnings, I'm like, okay, cool. Like I'll buy that. And then you might ask yourself, okay, well, why would you buy this after it dipped 10 or 20% after earnings and it's back to 113 where it was last week? Because I now have that extra information. Because I have now confirmed for another quarter that the information is positive, that the fundamentals are solid, and I'm not making that decision blind. Like, why would I buy something that I'm not in and take that risk a week before earnings?
So let me ask you this: Robinhood reports Wednesday. You're more familiar with that company, than the SMCI or anything else. We know the numbers; they're going to be very, very good.
Yeah.
At what price would you become like, hey, I need to actually buy this?
I'm just looking at the chart. It's like straight up.
What price did I say? Hey, you should be a buyer of this.
Yeah, 14.
14. Oh, that's right.
So I don't think I'm going to get it at 14 again.
No.
So let me just put that. Look, but I think if the earning, and I'm reading up more about Robinhood and behind the scenes, I think if the earnings are good, and I think if the stock continues to be, if the stock falls on earnings, then yeah, I'll buy a small position maybe, but I don't really want to. Right now, I got to be careful with my words here. Right now, with the information that I know about Robinhood, I don't want to build it into a super large core position because my perception today is that it's already fairly large. It's $50 billion. Now, that could obviously change because I think the more research I do, the more I can start to educate myself on like, hey, what is the actual addressable market here, and what is the rate of return that I can feasibly expect from that addressable market. So right now I'm like, well, if this is a $50 billion company, that's crazy because I'm comparing it with stuff that I own. Like SoFi is a $20 billion company and they're in all of these other markets because of their bank charter, right? And so I'm like, okay, well, if I look at those two together, you have a premium on Robinhood because of their product that they're rolling out consistently, because of all of these other things, because of their growth rate, obviously. And so I guess what I'm trying to say is I need to go through the exercise of doing my own homework to make a decision of whether that premium is justified or not around, do I want to build this up to be a larger position, or do I want to build it up to be like, like I own Pinterest too. And Pinterest is like a 1.5% position for me. It jumped 20% after earnings because they're profitable and they have no debt and they're growing like 18%. And I feel like it's a sleeper pick that nobody cares. I made a post about it. It got literally 0 likes.
Yeah, I actually disliked it. So I never, no, just kidding.
so that's all I'm trying to say. Like, I think if Robinhood does tremendous and they jump up 20%, the numbers would have to be like absolutely spotless for me to buy. I think if the numbers are good and they fall after earnings, then I'm actually going to do a lot more reading to see if it's unjustified or not, and buy a small position, like a little taster position, so that I can actually learn more about, hey, where do I think this company's going, and form a thesis around it. And only if the thesis holds, so I want to build it up to be larger. That whole process was very accelerated with HIMS because I didn't feel like it was at a valuation that actually I felt like it was like super undervalued. At $13, the actual market cap of the company was like, $2 billion, something like that. So my point is I just have to go through the motions with Robinhood. I think the best case scenario for me is if they report great numbers, and if the stock falls, then I'll probably start a small position.
All right, fair enough. Yeah, and it easily could. Like, we know a lot of the numbers, we don't know all the numbers, but yeah, it's easy to invest in. Sageg noted that it is cyclical. I don't think it's quite as cyclical. I'd remove both varies, but yeah, cyclical companies don't necessarily mean that it's bad. Crypto winter, I don't think it would seriously dump. I think it would pull back some for sure, because we've seen some correlation with Bitcoin, and it would impact their revenues. But I think that we're likely to get a crypto winter well before we see an equity bear market. And so there's all these products that they're launching that are going to be new revenue streams. Futures is one they're just beginning to roll out. They see it as not a six-figure, nine-figure revenue source for them, and that, I believe, would be their 10th product that would have an annualized $100 million or more revenue stream. It's just launching internationally. Got questions on that, as far as the rollout strategy, but they have ISAs, which I guess I'm pronouncing correctly for a change, and SIPs that are coming this year, as well as options. So then it becomes a real platform. And just question is, how good do these things do? They have so much going for them. So incredible companies that are led well, that are positioned well. Even if they're expensive, I'd rather buy those than have something like SMCI, where I'm like, I don't trust the leadership culture. I don't know. Yeah.
I agree with this take. I think like last crypto winter, that would have been a huge risk. I think every crypto winter going forward, it's less and less of a risk because of how quickly they're growing.
Oh, yeah.
So I agree with that, at a high level. Again, like I said, whether it's Nvidia, whether it's Robinhood, whether it's SMCI or anything in between, I'm open to having new positions if I can get them at the price that I want them at. And I'll probably start first with cash secured puts. And then if it falls to my price, great. If it doesn't fall to my price, thanks for the premium, and have a good day.
Sure.
Okay, what do we want?
937 question on ABCL. This is Abcelera. This is one of two foreign companies that I own. New banks together. This is Canada, so it's kind of the 51st state, so not too foreign. But all jokes aside, it feels differently, but it's a lot like Tesla for me, in that I'm buying it and I'm not expecting it to go anywhere for the next couple of years, and I'm okay with that. Anybody that's buying Abcelera waiting for a quick pump, I mean, I think that might happen. I think that I've seen some rotation in biotech and the smaller cap names. I think that they're positioned very well too. But in the insiders, like their CEO just buys left and right. So I don't think that there's much downside, but there is a good chance that Abcelera is an opportunity cost. If the rest of the market just roars and rallies, while it just kind of sits there and waits until their pipeline and the partnerships bear fruit. That's kind of the nature of biotech, although I like this better than a couple of other biotech names that I'm watching that I don't actually own. So yeah, long term, I think Abcelera, it's one of those names that it could 50 to 100x, probably closer to like 50x, I would guess, if things go right. And it's like, oh, well, they'd have to cure cancer for that. Yes, they would. But it's a very interesting company. It's one of those that it's fun to follow and track. I don't mind supporting it at all, especially what they're working on. And I'm keeping it intentionally as a small part of my portfolio. I do need to allocate some more to it once we get after earnings season. I probably need to double my position because I think right now it's not even 0.5%. I'd like to get it up to between 1% and 2%, depending on where it's at and what the rest of my portfolio is doing. And I don't mind with making a few 1 or 2% bets like that. They're usually in the 1% size, but my conviction in Abcelera is actually growing. Recently, they're about to finish up their facility and open that up in BC. So that's exciting as well. But yeah, the way that they're partners and who they're partnering with, like that speaks volumes as far as that there is actually something there with Abcelera.
Yeah. I don't know anything about them, so I just won't comment. Tevis, you still selling options? Yes. Selling options, loving it. I have everything laid out, in my spreadsheet around looking at all my positions. And one thing I need to get better at is to sell options. Even like right now, I'm doing it very opportunistically. So if I think that something had a great run, I'll sell covered calls on it, and if it had like an unfair dip, then I'll sell cash secured puts. I need to get in the habit of like not being afraid to recycle my shares, and so I'm just trying to get better discipline around that. But yeah,
throw up Pauzilla's question from 943.
943, 943, 943.
He asks, which is the better buy today, Tesla or Google? Why don't you go first, Tevis?
I mean, it depends on what your goals are. I own Tesla. I don't own Google, so I'm going to be biased there. The reason why I own Tesla is because I think that there's more explosive upside potential if they execute perfectly. I think Google is going to be one of those, like similar to Amazon and Meta, maybe not so much Apple anymore, but it's going to be one of those steady performers over time. I think the fact that they're unwoking is definitely positive for them. I think they're going to be more focused and locked into actual product development. I think Meta is really stepping up in a big way. I think Amazon's stepping up. And, I think Google has a lot of initiatives that they're, chasing down that could yield fruit. So Tesla's in a really weird spot right now. Generally, I'd be like Tesla all day, every day. But that's what makes it a little bit more nuanced for me. But again, it depends on what your rate of your return on equity expectations are, and what your time frame is, and what your risk profile is.
Yeah, and I'm neutral. We've talked about Google before, and we were both pretty bearish. I've shifted to neutral. Part of that is their cultural shift. Part of it is Gemini. I've seen what they're doing, and they're integrating that well, unlike any of the hyperscalers. And they're cheap, honestly. Like they had I don't know where they're at. I haven't been following them so far this week, but they had a pullback on earnings because they're spending more due to being constrained. They had so much more demand than they actually had supply. And so, yeah, and they did this. Like that's Google would not have done that a few years ago. Now, I'm not a huge fan of Sundar Pichai. I still think that there's cultural issues there as well. But Google is if you were asking me like for a year, if I was forced to buy either Tesla or Google and hold it for a year, Google's probably the way I'd go as a swing. I would prefer Tesla long term, but a lot of those catalysts are longer term. Anything can happen. And we talked about some of the short term negativities with Tesla. I think those are shorter term. But yeah, that's where I'm at. Longer term, easy Tesla.
Great. I think that's honestly like a good place to wrap it. I know you have to go to the next show. You're like a CNBC contributor, man. You're going from show to show.
Good place to wrap. No Robinhood Weekly today. We did that over the weekend, and it's all Tanner's.
Oh, really? No Robinhood Weekly today?
Yeah.
Oh.
Yeah, we did it over the weekend. Amit is actually traveling, so we had to adjust to his schedule. And we're doing the earnings on Wednesday live together. So definitely watch that one, guys. I guarantee no matter what the earnings outcomes is, you're going to enjoy it.
People want us to stay on. I really wanted to go to the gym in 10 minutes, but I can stay for another 10 minutes.
Let's do 10 more minutes. Bring on the Tanner.
Oh, God, do we have to?
Yes.
All right. Hold on. What did I want to say?
Now, you're going to have to teach me how to give these memberships, because I have not figured that out. I looked and it looks like I'm spending my own money to gift memberships.
Yeah, dude. Like I didn't know that Luka was debuting tonight. I don't know if I should skip the gym to watch that game. Probably I'm not gonna do that, but
do both.
I guess.
Watch on your phone, lift some weights, run, whatever.
Yeah. Maybe. When does that game start, Jesse? Let me know because I might want to place a wager beforehand. Roy, do you have a YouTube channel now? Yes, he does.
I do. Yeah.
We're multi-streaming this ETF, so go follow Roy on his channel.
Yeah, just search for Crossroads. You should be able to find it. We're live right now, so appreciate all your guys' support. We're at 2,500 members. Remind me, Tavis, I got something cool to share with you after.
Yeah,
I'll share with Tanner too. But
Tanner, do you like our new background Tanner look?
Yes, I do.
I realize you can't talk when I put you off stream, but
no, I like it.
It's nice, eh? Go over on Luka points, triple double. Yeah, you think he's going to show out? I think AD has been showing out on the Mavs. So, or did he get injured again? Man, that dude is such a glass cannon, honestly. Tanner chugging. Okay, what do you want, Tanner?
A couple things. One, I feel like you guys are just turning into like a show that covers my portfolio. You guys are talking about Google,
This is why I don't
Robinhood. You know,
we make fun of half of your portfolio. So
you guys are out here talking about hymns. Like, come on, this is my portfolio you're talking about.
There is,
that's for
big
sure. Shareholder.
We will never, ever talk about Shift 4 or Lending Club, which are two of your biggest holdings. So
Lending Club is not a company that I hold. I've never held one share of Lending Club. I despise their slow growth. That is a bank. If someone's like, oh, I don't want to hold a bank, that's a bank. You know what's so funny is Google actually has a position in them.
I've seen Tanner's portfolio, guys. Don't believe him. He has Lending Club.
Don't believe it. That being said, though, Robinhood, I was wrong. I put out a video today. I got corrected fast and had forgotten points because we talked about this on the Robinhood Weekly on Saturday, and we had forgotten some points that we should have covered, which was 90% of their operating expenses is fixed, Tevis.
I object. I did mention that Saturday. You guys.
I'm sorry. Is this the Robinhood Weekly now? Did we just like move into that?
No, this is great stuff, Tevis. We're trying to convince you to become a shareholder of this incredible company, and you're like, no, I don't like making money. Stop giving me quality companies to buy and hold that I can just.
He's like, if it dips, I'll read about it. What are you talking about? Read about it now. So if it dips, then you already know.
Yes.
So what? Okay, so they have 90% of their expenses are fixed. That means that they can get a ton of operating leverage once they get critical mass. Like, what are you trying to say?
No, so with quarters like they just had in Q4, they absolutely just smoked the amount of trading volume that they've seen any other quarter, right? So here, let's take a look.
Oh my God, can we not?
We're doing it.
This has to be done, Tevis. This is an intervention. I told you at 14 to buy all the Robinhood you could.
Roy,
you're like, no.
Can you please read what it says under Tanner's image there? What does it say? Does it say Robinhood Weekly?
It should.
Go ahead.
Usually this is the time for it.
Look at these volumes right here, okay? 14, 11, 11, 9, 6, 12, 36, 21, 14, 73. Okay? The interesting part here is that their operating expenses are not expected to climb. So this is all going to fall to their bottom line. So, Tevis, tell me if you've seen companies that do this. I know that you're interested in the comments, but like actually tell me, we're here to make money. I want you to figure this out. Okay? Look at their net interest or net income margin. 6%, 25%, 27%, 23%. This quarter is probably going to be somewhere around 50% net income margins.
Which is insane.
All of their top line growth just went to the bottom line.
Why?
Because all their expenses are fixed, which means it won't adjust depending. Only 10% of it will adjust to the amount of volume that's flowing through the system.
How are they all fixed, man? What about international expansion? What about new product lines? What about they're actually reinvesting in growth? What about those?
I mean, they do that every quarter. So they try to keep it very similar every quarter. And it's almost like PayPal, right? PayPal is like almost exclusively variable cost. or variable cost expenses. So whatever the amount of volume that flows through, that's kind of what you're going to see on the other end.
Right.
And PayPal USD might change that. There's a couple things that interest the investors that's going to change that. But we're just not seeing that at Robinhood. And there's been a couple moments in this company during really hard periods. Like, this is what happens with businesses is they go through a really hard time. And then if they survive it, they actually come out much stronger. They like fired like half of their employee base. Like, they went from like nearly 4,000 people down to 2,000. And then they've went right back to even higher amounts of scale, higher amounts of customers. And they brought back like 10% of their employees. So they just saved all that to the bottom line. They just tightened their belt and they stuck with it.
Yeah, they're exercising obscene cost control. They're implementing AI to help scale their employees further. They're not having to cut people for that. They just can multiply what they're able to do. And it just, man, they're efficient. They're just like, if I feel actually really badly for anybody that's in a market where Robinhood is going in. Now, international will take time to scale, and we'll have to see how that works in UK. But like here in the States, like I would not want to be Schwab. Like they're dead. They don't know it yet. And it's years and years and years from now when they'll actually begin to realize we're actually dying. TD Ameritrade, that acquisition was to try to shore up, and give them some actual growth. That doesn't work. Like they cannot compete.
Right.
Yeah, the more I see it, the real competition for Robinhood is going to be IBKR. I think IBKR is going to take a large amount of the share. They're going to become the Schwab, and Robinhood is going to be the fast second place. Right. And the reason is that IBKR has a 30-year lead.
Yeah, and they're everywhere.
Yeah, they're like international.
But that's where Robinhood has their sights set as well.
Yeah. And that's the crazy thing is I don't feel like even here the price, I know the price action for a little while, like over the last year, they were higher for a return than Palantir. And nobody was looking at Robinhood like, oh, these guys are way up. Maybe I should short it. Maybe they're overvalued. Like it's a bubble. I didn't see one single person say that. Part of it is, it's not much of a retail name, so people just kind of ignore the stock. But phenomenal outperformance.
It's interesting that Interactive Brokers is 95 billion. So like they're basically double the size of Robinhood right now, and yet they operate in like 100 plus countries around the world.
It's about the percentage of rate of change, right? Robinhood's going to double here.
Yeah,
sure.
Like someone said, someone just commented on one of my videos, and they said Robinhood's definitely overvalued if it's worth 50 billion and Palantir's worth 250. I'm like, how could you make that comparison? Like Palantir's growing at 30% at worse margins at like Robinhood is every single statistic.
We got 2 minutes left in the stream, Tanner. Don't open this can of worms. All right. This is not a 2-minute conversation. I already saw Roy.
Right. We can leave it there. We can leave it right there. Don't even let Roy comment.
Yeah, all we can do, we're not here to tell people to buy or sell or hold, except for Tevis. We're telling Tevis if there's a freaking opportunity to buy Robinhood after a dip on a phenomenal quarter, you do it. You already know the company. We've been banging the table, dude.
Yeah.
Here, can I show you one other thing for how wrong the market is?
You got like a minute.
Yeah.
Why? Why do I have 1 minute?
This is our show, and we'll cut you off in a minute. So hurry up, Chart Boy.
We're going 40 more minutes. Hold on a second. So if we take a look here, first off, I'll show you a couple things that's wrong. Share the screen. You're taking up my minute.
All right, here you go.
Okay. Year-over-year rate of change in December, in 2025, they think we're going to grow by 18%. In 2026, they think it's 12%. And then by 2027, however, this is only one analyst, but they think 7%.
Yeah.
Okay. Crazy. In these years to come. So obviously, they know something that we don't. Analysts have got it figured out. Okay. However, let's go take a look. These are the most up-to-date numbers that we have for assets under custody. 194.6 billion and funded accounts at 24.8 million. Okay, this was for November, not December, Tevis, for which they definitely grew. Okay, however, whenever we look at their expectations from Wall Street. This is the most recent Wall Street analyst saying that they're going to come in at 44 cents.
Mm-hmm.
They have assets under custody at 177. Consensus is 178. We literally just saw that it's at 195. Like proven numbers from Robinhood, and that was in November. Okay. They say that the amount of customers is at 24.5. We already saw it's at 24.8. Like, this doesn't, like, they're wrong.
They are, in fact, wrong. Thank you so much, Tanner, for being on the Bootleg Weekly. Thanks, everybody, for being here. And we will see you next week on another show, Bootleg Weekly. Yes, Roy, last
And
word.
put in the comments, guys, afterwards, live as well, which of these two gentlemen do you think caves first? Will Tevis finally buy Robinhood, or will Tanner finally buy more than the $100 HIMS?
Bro, I already told you if Robinhood falls, I'm going to buy Robinhood. I am reading up more about it. Tanner, you can't comment. I am going to mute you. Thank you so much, everybody, for being on the Bootleg Weekly stream. We will see you all next week. Follow Roy on his channel. Watch Robinhood Weekly. Watch these two knuckleheads cover the Robinhood earnings on Wednesday. And HIMS Weekly is also going to be on Wednesday. And also, tomorrow, we're covering the SoFi Fireside Chat. So definitely tune into this channel for the SoFi Fireside Chat. Thanks all. See you next time.
Bye for now.